Market conditions, majority bullish, 12 and 2. SP futures flat to slightly up this morning, had been down about 1%, dipping down into that demand block and finding some demand. We're seeing that happening here at this level of this 60, around that 6,600 range, coming down, retesting that area. We'll see if that ends up holding. As of right now, pre-market, selling off, bouncing. That could certainly roll back over as we continue throughout the day going into the weekend. So keep an eye on that. Weakness towards the upper end of the range. The fact that the retest of the upper end of that range where this sell-off started is getting rejected, that's bearish. So what we want to see next is if we can hold this level, or if we break down below this long red bar. If we go lower than that bar and start to move down, then we're probably going to retest the bottom end of this momentum zone. That's still bullish, and it still could be in this consolidation, sideways counter trend, kind of overbought scenario. But as we're looking at managing risk, these are areas where you can decide to trim up exposure to equities just a little bit, or watch and wait for a pullback and then readjust at those levels. Nonetheless, we're just dealing with what we're dealing with, and that is what's right in front of us, and that is we're seeing some weakness here. We know that there's potential banking issues coming up at the top end of bull markets where there's been so much leverage. We've got record levels of margin debt. We've got record levels of credit card debt. Think of that inside of the corporate world and the private equity world. You've got just massive boatloads of credit and debt all over the place. Some of those loans and some of that debt is going to start to get exposed, and that's part of the process of what's happening. When you see a breakdown, we saw crypto move lower, which ended up liquidating a lot of guys on margin. And so if you get margin calls because people are over leveraged, that creates more and more selling. Okay, so this could happen. That could be one of the breaks that we start to get, is when you start to see a couple of bankruptcies like we saw in the auto industry. Where's the consumer being stretched? Who's not paying what? And are they starting to default? And are they over leveraged? Any downturn in assets is really going to quickly expose who is levered, because they get a margin call and they have to sell everything if they don't have the collateral to be able to cover that margin call. So the over leverage is going to be an issue right here, and that could be one of the issues in that banking and lending infrastructure, that we start to see some things. We also want to be aware of layoffs, as we have the government that shut down now. We're not getting a lot of the data as far as what the economy's doing, the employment data as well. Keep an eye on some of those mass layoffs. The consumer's tired. The consumer's over leveraged. Who's gonna buy what everybody's selling? Okay, the market is starting to get a whiff of that here as well. We're seeing sell-off here in internals, the number of stocks above the 50-day moving average down to 39%. Okay, so we're already in a significant downtrend with the S&P 500 as a whole. We're just at the majority now to the downside. We've just got a handful of stocks that are still holding up that trend. They either have got to pull these weak ones up with them, or they are going to roll over as well. So that's kind of the tug of war that's starting to take place. Earnings season, now that we're starting earnings season, is going to be very revealing to what companies are doing currently. So be aware of that expansion to the downtrend on the number of stocks in the 50-day. VIX spiked up to 30 this morning, 29, and has retraced back to 23. But we're seeing some fear come into the market. You can see on that weekly time frame, we're getting a little bit of a rally off those this bottom low right here, and we're seeing VIX pull back a little bit because of that, but those are definitely elevated fear levels. Watch to see if we get follow through from that. SP closed out yesterday at 12 and 2, a red bar right there. And again, we're just at the upper end of the range. Compression starting to take place. The question is going to be, how long does that compression unfold? You can see back here last year, this time, where we had similar type price action, some ups and downs and some flat volatility taking place. We could get that same scenario here. That'd be the more bullish structure. The more bearish structure would be we really start to break down some of these lows, and we get back down into that momentum zone around that 6,400 range. And if we start to see continued selling, that could certainly happen quickly. Dow Jones Industrial Average also 11 and 3 here on this retracement yesterday. or within this week. We've basically been consolidating inside of that red bar all week long. That red bar was last Friday, so triple Q, same story right here. Really indecisive after that bar. We're seeing that quick sell-off and then some consolidation. Are we going to break above it, or are we going to break below it? We'll see if we get any answers to those questions today or not. Small cap Russell 2000, we're seeing that. It had been quite strong here actually the last couple of days, or that sell-off. You can see we actually broke out above that high, so some strength in small caps in recovery. So as we're seeing buyers come back in, those are the names that you're getting. That could, the contrarian is going to say, well, that's the speculative area. Those are only speculative stocks, the small cap names. Okay, that's dumb money coming in and buying into the dip in the most aggressive names that could be the fastest to fall versus coming in and buying in S&P or Dow names. Okay, so keep an eye on Russell 2000. USO, we're seeing that continue to soften here. The oil trade back down to 67 on USO, continuing a pretty sharp downtrend and acceleration to the downside here on USO. Gold, on the other hand, still continuing this big run. This is going to be the one that really everyone is watching and waiting to be like, what the heck is happening here? As economic scenarios start to unfold and reveal themselves, then we're going to get a little bit better idea of why gold is going up as fast as it is. There's definitely lots of conjecture, but it's in anticipation of something. Is it a flight to quality? Okay, is it a flight to the equities really getting beat up? Is it this discussion with Bitcoin? Okay, is Bitcoin, we're seeing Bitcoin, I included Bitcoin here as well just because it has been a talking point, and we're seeing that roll over to majority bearish. It's all-time highs. The weekly time frame here on Bitcoin, it's a beautiful chart pattern. It's a fantastic looking uptrend. 100K could be a support zone as this is retracing and seeing some weakness here as well. Let's take a look at the 2-year. We're seeing that week in 345, continued downtrend, continue expanding here. That is now breaking to the downside. If we talked about this yesterday, watching for that 329 range. Let me pull that in. So we could get that 329 could come into play here on the 2-year, and still testing that 4% range on the 10-year. The low end of that's going to be that 380 area. As well, a couple ideas to consider today. We've got Western Digital, WDC, really nice uptrend, pullback. You're starting to see some stocks that have been retracing, still having some demand here, and also seeing RAPT, which has also got a really nice uptrend, retracement, pullback. Not big volume coming into that. There are still a few names that are sitting in there with attempted uptrends. Certainly be cautious at these levels. Caution using position sizing and stop losses for risk management. That'll do it for today's update. Everyone have a fantastic day today.